this part is probably something which a couple of my friends, specifically NRI friends, who obviously have went abroad for studies and then are doing their jobs there, would love to understand, not just for real estate as an investment class, but in general, how should they be looking at financial planning? And do you, as Bachat, also do anything for these guys?
Yeah. So NRIs is very different use case scenario as such. So what the many of the NRIs, they have been in India. They went outside India for higher studies, got relocated there, having their job there, and ultimately they are planning to come back to India after a few years once they have generated a substantial amount of wealth and corpus. So we at Bachat do focus on that. So we have an expertise in managing the financial finances for the NRIs and doing the financial planning. So accordingly, we fine tune the goals for them depending on the requirements. Few of the NRIs want to come back to India and be there for the part of the retirement life, be there in India. Few of the NRIs are there that they want to settle in the country where they are currently working, and there are no plans to return to India. So we manage both type of scenarios as such. There are cases where people have worked outside. They have now moved back to India, but still their funds are in US assets or certain international assets. So how to manage their funds, how to take their income tax angle into that, how to ensure that the tax is not paid in both the countries, because the asset is lying in some other country and they are residing in India. So in case there is any gains are there, then how to avoid the double taxation point of view. All those things we take into consideration and do the planning. Another important thing which many NRIs are not aware, especially US-based NRIs, are they have restrictions in certain types of investment in a way that they should not do the investments for example, for US-based NRIs, they should not do investments in Indian mutual fund directly. The US regulation says that as per the US regulation, any unrealized gains on those mutual fund units are required to be taxed, and the tax needs to be paid in US, irrespective of whether you are sold or not, which is quite cumbersome. So many people are not aware about that. So this specific rule is the PFIC rule, which is there. So when people keep on investing in mutual funds from US, but ideally that should not be the correct way to do it. So there are like this, there are many nitty-gritties which needs to be taken care of. If the person is from US, then this is the to-do list and not to-do list. If the person is, say, from UAE, this is the things which you should focus on. These are the things you should not focus on. It's not a single plan for everybody. And accordingly, based on the person where he is located, what would be his future, where he would like to be spending his retirement life, and accordingly we do the planning.